Hi and welcome back to Cheeky Crypto. Today, guys, we're going to be jumping down into the world of Bitcoin, giving you a brief update as to what's been going on with the price action of BTC. As I get into this video, if you find it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Okay, let's dive right down into this. Bitcoin paired up with USDT on the hourly chart. Binance is our data source. Following on from yesterday, and kind of what we're talking about on Twitch with the live stream people this morning, we kind of seen this B wave be as unpredictable as we kind of expect these things to be. We can see it actually has moved up progressively, but it doesn't really change our landscape any. If we actually tidy up this graph just a fraction, we can actually see a little bit more clearly what is going on here. If I just take all of this out, you can kind of see that we're just trading sideways between these two key levels, and this remains still true for several days that we've been talking about it. 18,471 is the low and 20,385 is the high. These two dashed lines just here. Okay, the one down at the bottom is this local low coming in at 18,125. There's two potential wave counts taking us higher and lower. So until we kind of make a decision, or Bitcoin makes a decision as to which way it's going to go, we are stuck not really truly being confident in either direction. Elliott wave theory helps us understand a little bit, and we obviously can use other metrics and other kind of techniques on chart and price analysis to help us understand what we think the most probable scenario is, and that's what we're going to do in this video. So what I'm going to do is I'm going to go ahead and put my lines back here, and this is Elliott wave theory. We've got three-wave structure taking us up higher towards the $21,000 level, and we've got a three-wave structure taking us down towards our $18,000 level. So we can see that these both are valid until proven otherwise, as in we have to either go up higher than our dashed line at the top here. Okay, going up higher basically means that we are not going to have this ABC structure coming down here. Okay, and we can ignore it. And if we come down here at the bottom, then of course, we're going to have to ignore this structure for a little bit longer. It doesn't invalidate it though. It means this one actually is still valid until we drop down lower than the $18,125 level. If we do that, then this is not going to happen under this three-wave structure. So there's a few things to think about. There's a few things here that we should be concerned with, but we're going to try to narrow this down and give our most probable scenarios a go. Okay, so knowing that we are just trading sideways, and most traders, if they're worth anything, will know that this is an area that you don't want to get involved in. Basically, what we want to do is we want to go with the trend. We want to go with the flow, and we don't want to get stuck in a range. Getting stuck in a range is potentially bad, and this is usually what leads you into losses if you are trading. The idea of day trading, LC, is also something else that kind of crops up and causes people to also lose. Basically, that narrative of I must create a trade. Sometimes the best trade is no trade, and the trend is your friend. These sayings exist for a reason, right? You don't have to trade. When you're not in a trade, there is no risk. When you're in a trade, there is risk. And when you have an undecided market going sideways, there is an increase in the risk. So understanding that, this might not be a trading opportunity, this is a time to sit back and have a plan. If you come up here, what you would do, and if you come down here, what would you do? Okay, we're going to try to give you an understanding as to whether or not we're going down or whether or not we are going up using probability and other techniques on the chart. Okay, so when I have a split opinion, when we got Elliott waves going in both directions, it's important that we look at other things as well. So what we're going to do is we're going to first of all throw on some order blocks. This isn't new, this is pretty common, and there's aligned to both of these key areas for us, which is why we know that the Elliott wave theory is mapping up nicely to these areas of liquidity. Okay, so we've got some sellers up here, and we've got ourselves a bunch of buyers down here. Okay, these are two areas that we know from our Elliott wave theory. So this doesn't help us understand exactly what's going on just by taking a look at the order blocks. Now we can of course go ahead and put the HTF liquidity on there, and we can see where all the liquidation events would occur as well. Okay, and again, this is not perfect, but it's going to give us a rough idea. You can see there's a lot more red, as in a lot of people going long, and this is liquidity that could be up for grabs. You can see that this also marries up with this order book at the bottom. This gives me the ability to think that maybe down here is the most likely scenario. There's a limited amount of liquidity to the upside and a lot more liquidity to the downside. This means it's more attractive to the whales and the market makers in terms of grabbing as much money as possible. That's going to be on the way to the downside, not to the upside. Of course, we could look at this as a quick flash up, grab that, then move down very rapidly afterwards. That's also possible. So this gives us an indication as to some interesting stuff that's going on. I'm going to turn these off for a second, and then we're going to look at some more price analysis, okay? So outside of the Elliott wave theory, there's a few things that are going on here. We're going to look at support and resistance lines. That's one way of looking at them, and I actually refer to them more as supply and demand lines, because that's essentially what's going on, and more zones than lines. Let's go ahead and take a look at this area just here. Okay, I'm going to go ahead and put this on, and I'm going to draw this right up into this range, and I'm actually going to pull it down into this wick here. Okay, so here we can see that we came up into this area, and there was a bit of supply. There was a supply issue, basically. Basically, a lot of sellers increasing the supply that's available for people to buy, therefore the price goes down. Price is driven from supply and demand, okay? So as this is a supply area, every time we come up into it, we get rejected, okay? Think of that as resistance or supply, is entirely up to you. Okay, up here, hit this resistance, pull down. Come up here, hit the supply line, come on down. So we know that there's a surplus of sellers in this range. This seems a high probable area, unless we can push through it and turn it into a support line or a demand line, as in there's more buyers up here. Until buyers appear here, we're likely to get rejected. So this is an interesting point. We've just come up, we've retraced into it. Let's throw on those HTF liquidities. Here we can see there's a little bit of liquidity right inside this little range here. That's actually quite common. That's come up right now as people are going short, as we think we're hitting into this area of resistance and we're likely to move to the downside. So that's kind of what's going on here. This area up here, there's also a little bit of some, supply up here as well as a resistance line, and there's a lot of liquidity just put on this local high up here, this swing high point. This is a stop loss for people going short on the market, okay? Chances are moving up there could be happening, and again, it could lead us into a double top scenario and a breakdown. Again, looking at resistance or supply up here. Let's turn the liquidity off. Okay, what about the opposite? Where is our support coming from and where is our demand coming from? Okay, where's the next level what we're looking for? Well, we can draw out the obvious to start with. I'm going to pull this actually, I think I'm going to put it right about here. This is going to be subjective. You can do this in many different ways. I'm just going to draw this approximately on for what I can see in the history, okay? So in here, we can see that this area was a demand area. We went into it, okay, was maybe a little bit of resistance to start with. In fact, if we pull this over, we can see here, it was a bit of an issue of demand. We pushed it up. Actually, then it turned into a bit of a supply zone. We pushed back through it and so forth. I was working this as support and resistance, however you want to look at it. Then, of course, over here, we turned it into a supply and a demand zone, right? So demand right here pushed us up into this supply zone. We got rejected from the supply zone back down into the demand zone. We went down a little bit lower and then we came back up and we pushed all the way through as the demand was still there and we pushed back in. Last time we fell down into here was also more demand, so we pushed back up into the supply zone. Okay, so we go from support to resistance. We come back down to support. We've gone back up to resistance. Now, because we're trading in a range here and we're just going sideways, we have a high probability that we're just going to come back down into this demand zone or resistance zone. So when we start thinking about this, that's kind of the next area that we're going to be thinking about, right? Let's go ahead and throw the liquidity on. What's in here? Well, there's a little bit of, liquidation events going to go on here for people who were going long. Okay, so this is going to become a bit of a buying area. So we know that this is going to be an area that we're likely to bounce from. Likewise down here when we got those stop losses on these swing low areas as well. Okay, so we know that this is a high probability area. We're up here getting rejected from our supply zone. We're going to come back down to our demand zone and we're going to continue to move on in this direction. So what I'm thinking is that we are going to move down. We're going to come into here. We're going to bounce up. We're going to get more liquidation events happening here. And then we're going to break this previous area of demand and it's going to move us down lower. That's what I think is going to happen. The liquidity is all down here, but they've got to get past this area first. Okay, so selling pressure is going to mount. We're going to move down in my opinion. Okay, let's turn the liquidity off and throw our order blocks on and go into a 30-minute chart. What do we see right up here on our 30-minute chart? This area, we wicked into it. This is our supply. In fact, if I come back here and I grab hold of this, just going to put this onto a 30-minute chart. I'm just going to go ahead and just put that onto the minute chart for a second. Come on down into our 30-minute and you can see this order book is right in here. We wicked into it and it actually is no longer valid. Okay, so what we can do is we can see that this order book has now been filled, or they've moved their sell orders. They're no longer at this particular level. So let's go hunting and see if we can find any more. We can't find it on this 30-minute chart, obviously. So we'll go down into a 15-minute. There you go. It's just up here. It's still here. but it's really, really small stuff. We're not overly impressed by this. So if we are to come up, we are going to find more resistance in this range. You can also see some sell orders down here, but we smashed through those on the second attempt up there. So interesting stuff. Let's go back to our hourly. Okay, so here we can see that this is going to be our resistance. We can see our demand. We can see the good liquidity all the way down here. So I think that's the most probable scenario. But I do want to stress that essentially we are going sideways. This is a high risk area. We don't necessarily want to be trading. We try to make the best out of it that we can. But essentially this is definitely going to be high risk in my opinion. A move to the downside seems likely though. If we go ahead and check the Stochastic Rsi, where are we on this hourly chart? We're just coming out of the overbought area. So we are looking for price to move down. As we come over to the 4 hourly, yep, you bet it, we're overbought. So we're looking for price to come down. On the 8 hour, yep, overbought, looking for the price to go down. On the daily, overbought, looking for the price to go down. On the weekly, almost overbought, looking for the price to go down. You kind of get the idea, guys. The price is going to go down. But the only question is when, right? We can be wrong about the structures, and we'd be wrong maybe about how high this can go before we go down. But one of the things I'm incredibly confident on is that we are so overbought, the sellers are going to take control. The bears are going to take control. The price is going to push to the downside, in my opinion. We don't know what the catalyst is going to be, but I do think it's going to be there, and I do think the price is going to move steadily to the downside, where we get hold of as much of this liquidity around the $18,000 level. Guys, I'm going to leave this video right there. If you have found it useful and informative, hit the like button. I do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe? Tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Guys, until the next one, have a fantastic day.